How do you get a bank to lend you money to buy a commercial property when you've got enough money in a bank for a deposit, stamp duty, all the legals, but you haven't completed your tax returns, you've got complicated lending complex lending structures, you've got partners, directors, multiple businesses, different types of incomes, or you simply haven't completed your tax returns for that particular financial year, where the banks are asking for those numbers, say from January through to May every year. We always seem to have that challenge. If you've ever asked yourself that question, how do I get into commercial without having to provide all the documentation that's required on a commercial property, we've been able to show clients how to do it using a product called Commercial Lease Doc Loans. These are fantastic for our complex lending commercial investors. I'm Neil Carstairs from Mortgage Corp, your property investment mortgage specialist, and I'm going to show you an example of how we were able to help our client late last year get into a commercial property using a lease doc. The lease doc is simply using the rent to cover the interest payments. Generally speaking, there has to be very good coverage of rent over the interest payment to get it over the line. When we sat down with this particular client, we were able to look at all the different options that were available, and considering that person had enough money in there for a deposit, they had enough money for stamp duty, legals, and another one which is val fees. Obviously valuation fees are higher on commercial than they are on residential property. We did all of that and was able to show this particular client was looking at buying a property for $650,000. Now, generally with commercial properties, you can get fairly good yield or good rental returns. This property was offering a rental return of $800 a week, which is basically about $41,000 a year. Okay. When we did our figures, we were able to show the client how he could borrow up to 80% on a commercial lease doc loan. Okay. When we did our figures and showing the rental return versus the $41,000 per annum in rent versus the interest, we were able to show the client that in this particular example, he only needed to borrow 70%. Most commercial property lending is between 50 and 70. There are products that allow us to go to 75 and 80. And with the lease doc, this particular example, we were able to show him how to get up to 80% on a lease doc. The interest, when we work with our investor clients, we like to add buffers. So we like to show our clients what the minimum repayments would be. Then in a worst case scenario, if interest rates were to go up, what would you be able to afford on this scenario? Well, we knew that his rent at $41,000 per annum was definitely going to cover $28,000 per year in interest only for that period of time. It was a 5-year by 5-year by 5-year term, and this particular property was actually in its first year of its first 5 years. So the lease doc scenario had a lot of check boxes that were ticked and everything stacked up well. The client didn't have the need to provide any tax returns or any other information on that basis other than assets and liabilities and management account information, so he could see that he was trading profitably in some cases. This is a commercial lease doc for a $650,000 purchase. Obviously, commercial investment property can be a little bit complicated for most people. We like to show clients all the different options that are available, and this is one of many. If you've got any specific questions, you can leave a comment below, or you can get back to us via 1300 138 943, or go to mortgagecorp.com.au, ask for a free loan strategy session, and you can fill in the details and I'll get in contact with you personally. I'm Neil Carstairs from Mortgage Corp, your property investment specialist.
Hi, my name's Craig. I'm an accountant from Melbourne and we currently live in Heathmont. I was first introduced to Mortgage Corp quite a while ago through a client of mine who, after many discussions with him, I was explaining that it was difficult to find a quality mortgage broker in the Melbourne area. He mentioned that he'd used the services of Mortgage Corp in the past and he was very happy with the quality of work that they'd done for him in terms of his structured lending requirements. So I gave them a call, and they were very prompt to get back to us, and the meetings generally took place in the next couple of days. We outlined what we need, Mortgage Corp went through with their systems and procedures, and they essentially laid out how it would go. They had no hesitations in letting us know if there was anything extra that they required from us to get the loan over the line. And it was generally a straight up, no nonsense approach to getting what was required to be done across the line. So we definitely have no hesitation in referring Mortgage Corp to anybody, and in fact quite a number of our clients are referred to Mortgage Corp purely because we know the quality of service and the approach that they take to very complex lending structures. That they have the experience and they have the knowledge to get that done. I guess going forward, from our point of view, we have a detailed investment strategy that we have gone over with Mortgage Corp. They know what we're after, and they provide us with the advice that going forward is essential for us to make the decisions. And I guess as an accountant, having all that information is essential from that point of view. Thank you.